Everyone, welcome to IGCSE Accounting. In this video, we are focusing in terms of balance the ledgers account and transfer the statement, the account into the financial statement. Okay, let's look at the first example. So this is example number 10 in page 26 if you do have the textbook. This example, there is two transactions. So the first transaction is 16th of November. Sean received $500 rental from in the bank. That means they received the money in the bank through the bank transfer. And then by 18th of November, Sean making a payment from the bank, which is $150 for insurance is expenses. Let's have a look how to do this double entry into our account. Okay, so first transaction is about rental. Rental is not rental that you're paying to your landlord. It's rental that you receive from others through bank. So through bank, you receive the money, the bank increase, right? Remember, bank is asset. Bank is asset. Asset when increase is debit or credit? It actually is debit. All right. So how much is the amount? The amount is 150. Increase. That means increase in debit. When it happened, you just put the date there. And what is that all about? Why you receive the money? Because of rent received. And same thing, the transaction happened in November. And then 150. And then how I received the money is through bank. So this one and this one is the same, right? So this is what I mean for first transaction. Now look at the second transaction, which is we are looking at paying. It means the money reduced. And paying from where? Paying from the bank. So asset reduced is in right hand side, which is credit. How much reduced? Sorry, just not make a mistake. This should be 500. Okay, this should be 500. Then this one is 150. So money reduced by 150. What is the purpose? Is because of insurance. And you create another T account insurance. The date, let me complete it, which is insurance is 18. Of November. Sorry, another mistake I realized. This is 16 instead of 18. This is 16. Okay, so this is 18 of November. Then this is bank. Then this is 150. So this is example number 10. The complete answer is like this. Okay, all right. Back to the next example. Taking this note. Okay. So in business, when you put money as an owner, you put money into the business. And then, is that means that forever you cannot take it out? Not true. You actually can take it out. So the definition of drawing is asset, which is money or other resources. Other resources, sometimes it might be means that the owner, instead of withdrawing cash, which is money, can be withdraw as like the goods and inventory for personal use, which is possible. All right, and then that the owner withdraw from the business for personal use. Okay, so that is the definition. Okay, so here is some example want to show you. All right, let me see whether I can put in a bigger screen so that you can see better. Like this. Okay, so you see asset is in the left, in the right there is liability and owner equity. So from this statement of financial position, you can see here that the capital, which is equity, originally is 5,000, less drawings, that means withdraw, which is 500. So ignore the profit, which is I haven't covered it yet. All right. So the current equity is 5,000 minus 500. So this is what it means that when you are doing the draw. All right. Okay. Yeah. So I'm looking at maybe we do one example for you, which is example number 11. Okay, let's go back to the T statement. We try to do one drawing example for you. Okay, so I copy this as well. Let's do, oops. Let me see. Do like this. All right, so we do another T account. For example, number 10. Okay, all right. So example, sorry, not number 10, number 11. Okay, let me change the screen a bit to the T account. Yeah, I hope you can see how it's not number, so it's 11. So the question is like this. Okay, 16th of November, Eva takes $50 from the business, from the bank account for her own use. So how to do the other entry for this case? Okay, ignore the insurance part. Also ignore this one. This is for the next exercise. So I put it below. Oop. Okay, so we focus in here. Okay, it's Eva. All right, so imagine this is the bank account for the business. The money is reducing, right, for this case. And when it happened? It happened in 28th of August. And then this is owner equity. Equity, which is, is Eva. All right, and then it happened. So the money is going out. Remember, I keep repeating that bank is actually asset. So when the asset is reducing, it means that it's credit. Okay, so it's credit. So credit is here, and then what is the purpose? Because sorry, not equity. It's drawing. Okay, so you have to indicate that this is drawing, and this is Eva, which is the boss. Okay. Bear in mind that it doesn't mean that all the company have one boss. There are many businesses that the boss is bosses. That means many of them. So you need to indicate the name so you won't get confused, right? So it's $50. And then because in bank, reduce is in the credit. So in this drawing, the Eva's drawing, this T account, it becomes in the debit side. And this bank, and then this 25th August. So this is the example of how drawing means. Okay. All right, now let's go back and see what we need to do next. The next thing that we want to look into is the balance of the account. Okay, let's have a look of the definition. Let me hide this one. Okay, balance of an account, the overall difference between the total on the debit side and the total of the credit side of an account at the point of time. So at the point of time means that it's no fixed time. It can be any point of time. We need to read the question carefully in order for us to do the exercise. All right, let's look at the next exercise that allowed me to explain to you, which is 16th of November, Eva takes 50 from the bank for your own use. So it's not this one. Okay, let's do the example of 12. So example of 12, okay, Amber account is a trade receivable account. In the account of Amber, there is a number of entries on both sides of the account. Balance the account for April. So we need to, at the April, we need to cut off those, so we want to do the balancing. So let me share you the screen right now, the T account here. Okay, I already done some key in, which is Amber account. Here you go. All right, so we can see that for Amber, which is trade receivable, just now in the example, I think I read out for you already. Okay. Okay, and then is a trade receivable. That means money to collect. It's a company called Ambo. Right. This is various of different transaction sales. This is the total. But in 7th of April, there are some sales return. That means Amber not happy with the goods and then return $21. Okay. And then all this is credit. Means that those sales, but Amber didn't pay me. But we received some money from Amber 66 on 12th of April. Okay, ignore this one first. All right. So how we do this balancing? So let's try to understand that what is the total. I suggest that you total up one side and try to total up this side too. And you realize that it's not balanced. This is 110. This is 87, which is not balanced, right? Okay. So what to do with this one if not balanced? Let's have a look. In order for us to know how much is here, which is this particular one, let me highlight here. Okay, for you to do so, actually not very hard. Just to take this number, that means the total of in debit side, and then minus of this one and minus of this one. So there is an amount, that means something that you need to carry to the next month, right? Carry the balancing figures for you to carry to the next following month, which is 23. So how to write over here? So by 30th of April, okay, balance to be carried down is 23. Okay, then this amount, okay, this is the total. Let me try to draw some lines. So, okay, this is the total. You can see that these two amounts is exactly the same and have to be have to be balanced. Okay, so you need to, from here, you carry to the other side, which is 23. And then over here, 1st of May, the following month, right? Balance to be brought down, which is 23. So we completed this particular balancing, which is carry down the outstanding balance. For this is example number 12. Okay, so let's have a look the next exercise. Let's see. Okay, we have another exercise of 18. Okay, so we're showing the T account in order for me to share with you. So the next exercise to show you is the balance of account with some outstanding. Right. So for this exercise, in both of the sales account of Louis, there are some series of entry, which is only one side of the account, and we need to carry the account towards the other. So let's have a look whether I have key in any of them. Looks like not yet. Okay, no worries. Let me do that right now. Okay. Oh no, I actually did it. It's here. Is it? No. Okay, never mind. Okay, let's say this is the sales account. Okay, so for sales account, 1st of April, there are some transaction happen for some 18 of April. Samuel. So Samuel also bought something which is 93, and then 27th of April. Okay, so Yushi is 325. So this is sales and happen in this way. Okay. And then we also see that Louis also have some transaction here. We trade of Apple and then make some purchase. And the purchase is 118. All right. So what should we do when we need to do the carry forward thing? Okay, let's start with the sales first. So in order for us to balance it out, so the step one is you total for this one. So you know it's 536. Remember, you need to do the line. Don't forget about it. Okay, so 109. But here you can see that it's 0. So what should we do? 536. At the point of 30th of April, how you write is balance CD. So you just carry down. All right, just balance carry down. And 1st of May, balance brought down. So is 536. So here, this one and this one were always the same. Okay, always the same. So this is how we call carry down and also brought down. So you just remember CD and BD. And then in terms of this is purchase. You see, from this account, you know that there are some purchase happen. That means I buy something. In Louis' account, it means that I still own Louis something, but not yet paid. So this is trade payable. It means I need to pay one day, but not yet. Okay, never mind, not yet. But it doesn't mean no need to pay. No, I have to pay. It's just not yet. Okay, so this is quite simple because only one transaction. You know that this is 118. And let's do the line method. Okay, and then you know the other side for sure is like this. But here is empty. So what should I write? So you have to, for sure is something. But how to answer? Wait, what is this one? Again, balance CD. Sorry, I realized I make the typo. Okay, and then when it happened to do this carry down method, it actually happened end of April, and then the following is the other side. Once I do here, I have to come back here. So is 1st May balance brought down. And how much? 118. Simple, right? So that is what you need to do. Okay, so this is brought down. This is the complete answer for example number 13. All right, let's see whether I have the example 14 here. Yes, I do have. Okay, so I hide this one first. So I go through with you for this example 14. We show directly in this example 14 in this slide directly. Okay. All right, and then so looks like example 14. We are looking at a bank account, a business bank account. In 1st of January, there is some balance brought down. That means the bank actually having a balance in debit side. So it means that it's a positive amount, $165. All right. And then it looks like I have some sales of 110 on 5th of January. And I also received some income. That means someone pay to this business, 84. And then it says Amble 90. Means Amble actually pay on 26th of January to the bank account, transfer certain money coming in. Okay, it's positive one, which is 90. Okay, so this is all the positive side. That means income coming in, which is in this row, in this particular column, and we'll just total it out. Is 449. Okay, now we look at the other side. The other side, 11th of Jan for Melissa, 88. It means that actually I pay Melissa from my bank account 88. Is from the other side. It reduced for an asset, when it reduce, it will go to credit. Okay, so it's 88. So I pay Melissa 88. And from here, I can see 12th of January, insurance 120. It means that actually I pay to insurance for 120. Okay, so until this point of time, that is all my outward. That means my money go up, 88 plus 120. You will realize that the total of this by right is not 449. So there are some difference. The difference is 241. The balance 241, that means you get 449 minus 88 minus 120, you get 241. You put an amount over here. And then you want to close the account, that means balance the account of 31st of January, that means end of the month. So you need to balance carry down. Is 241, and then brought forward to 1st of February, the following month, which is balance brought down to 141. From this account, I know that this business at the point of 1st of February, there is a bank account balance of 241. Just to let you know that at this point of time, if let's say the bank send you a statement and saying that the bank balance is not 241, something is very wrong. All right, there is a reconciliation that will take place, but we not cover at this topic at this point of time. Let's continue to our next example. For example number 15. All right, example number 15. Sean business ends by 31st of October. The balance of the sales account of the year is $198,000. All right, and then how to transfer into the income statement for the ledger account. So Sean business is sales. It actually balance carried down at 31st of October is 198,000. And then you want to transfer to income statement, right? Income statement actually also named as profit and loss. How you do it is you go to here. That means in the left hand side, you have to write 31st of October income, transfer to income statement, and then 198,000. Let me show you income statements, how we're going to write. Okay, I double confirm there is no, okay. I hide this one. Okay, so this is the income statement. So you transfer there. It actually, just now I showed you the slide, is in debit, right? So in income statement, the sales you have to put in right. Okay, so sales, which is 998,000. In income statement, sales is this much. So I transfer, I complete. So this is how I transfer to the income statement. Now, we look at the example number 16. Sean business ends by 31st of October. The balance of the wages of the year is $39,500. So how this transfer to the income statement? Okay, let's have a look of the wages T account, how it looks like. Okay, in the wages T account at the point of 31st of October, I can see there is a balance of $39,500. So for me to transfer, all right, I have to, in the right hand side, I have to write transfer to income statement, 39,500. Okay, after you write this one, remember this is in credit, right? So when it happened to the income statement, let me show you the T account. Then this time, 39,500 will happen in the debit side, because just now in right, when I wrote transfer to the income statement is in the credit side. So income statement, I have to debit side. All right. So here is wages. You again, just put the account name will do. So this is wages, 39,500. So let me do a little bit further. You realize that, how come these two is not balanced? What does this mean? Imagine this is a very simple business, only got wages and also the sales. All right, just we want to close the account to check whether it's profit and or loss. So what we do is, first of all, we just total up the whole thing, but because the whole thing only 198, that's simple. Okay, it's so simple. Okay, so you realize that, hey, there are some different, right? Yeah, there is a difference because this one total up, not this one. Okay, so there are something is different. Something different means what? Actually means that this is a profit. And how it goes is you just take this amount minus the total of left hand side, you get the profit. This is the profit. Okay, so this is the profit of this simple account. All right, let's move on to the next. Okay, for sales ledger, which is just now I do in the previous video as well, I mentioned about sales account, sales tier account. The book recording the trade receivable, that means I trade that I receive money. It contains the personal account of all credit customers of the business. And then the purchase ledger actually means that book recording the trade payable. It contains all the personal account for all the credit supplier of the business. This is a definition. I know if you do cover and understand all the examples that I in the previous video, you should know what it means. But this is just the definition whereby maybe your exam will come out, ask you to differentiate between these two, purchase and sales ledger. And besides purchase and sales ledger, others is considered nominal ledger, which is contain all other account not found in sales and purchase ledger. Okay, so this is to summarize all these definition, and then that's all for this video. Thank you very much.